Welcome to Just Jackie for Coastal Mortgage Group, powered by Lydian Financial Services. This is a monthly video series talking all things lending and market updates, so let's jump in. Hi everyone, and welcome to this month's edition of Just Jackie. It's always good to get some hot off the press news as a winter warmer, so let's get straight into it. We aren't winning any headlines here. Our call is the same, that the cash rate will come down at the end of the year or early next year. The big inflation figures will be published on the 31st of July, just in time for the August RBA meeting. This is the key date for what's next. Budget night is on the 14th of May, so hopefully a bit of good news and a few extra dollars in the bank thanks to some tax cuts. And as for the banks, watch out for the interest rate changes being made on your loan as the banks are trying to maintain their big profits. As for borrower news, we're busy on a few fronts. We are continuing the work with the tail end of the clients coming off the very low fixed rates. The rate reviews we are doing is repricing with existing lenders, then reviewing these new variable interest rates against the market of other lenders. There is a mix of outcomes in the pricing process. Many lenders are reluctant to compete, and as such, the focus is then best interest rate, financial benefit, and ability to move. We are also working with clients who have maturing interest-only periods on investment properties. This is a credit event, so the process requires a reapplication to the bank to get an extension to interest-only periods. For many, the credit assessment for servicing using the current interest rates and assessment rates requires a review of lenders. We are looking at best interest rate first, but the cash flow and budget requirements is primary, and if affordability is not evident at the borrower's existing lender, then we open up the review. Also, extending the term of a loan back out to 30 years to minimize cash flow and budgeting is part of the refinancing review conversation. The demand for first homes up to purchase price of 1.5 million to 2 million is huge. Interestingly, our first home buyer age range stretches up to 40-year-olds with families and deposits gifted from mum and dad. These borrowers are again looking for best interest rate, but for many, the maximum loan amount supporting the purchase is primary consideration. This is in line with the tight property market and maximizing the ability to purchase sooner rather than later. Now let's look at some great interest rates. For home lending interest rates, Heritage Bank is offering a principal and interest variable rate at 5.99%. There's also Bendigo Bank with a principal and interest variable rate of 6.04%. This includes an offset. And also Me Bank with their principal and interest 3 years fixed at 5.79% with a cashback. For the investors, Bendigo Bank is also a favourite here with their principal and interest variable rate of 6.24%. Auswide is offering an interest-only variable rate at 6.34%. And last but not least, Bank of Queensland also has an interest-only 3 years fixed at 6.09%. As for self-managed super funds, we're liking the look of Wealth with their principal and interest variable rate of 7.19%, including an offset. Be sure to reach out to your broker to go through these interest rates, and let's help you save a few dollars. And that's everything for this month's edition of Just Jackie. Thank you so much for tuning in. I hope you have a great end to your month, and we'll see you back here same time in June.